Moderna. You know the name. It pretty much defined the pandemic era for a lot of us. But what is it today? Is it a biotech titan forging a new future, or is it a ticking time bomb just waiting to go off? Welcome to Iron Financial. This is where we help you forge a stronger portfolio by cutting right through the market's weakness. Today, we are putting Moderna under the microscope, and we are not holding back. The huge question on every single investor's mind is this: is the skyscraper they built on COVID revenue actually standing on a foundation of steel, or is the whole thing about to collapse into a pile of rubble? We're going to tear down their latest earnings report piece by painful piece to find the real answer. Is this company built to last, or is it set to crumble? Let's get into it.
Yeah, that's exactly it. That is the billion-dollar question, isn't it? I mean, the easy money, the government contracts, all of that is gone. The world has moved on. So now we get to see what's really holding this company up. We all watched that meteoric rise. I mean, it was a true black swan event that made them a household name overnight. But you know what they say, what happens when the tide goes out? You find out who's been swimming naked. Is Moderna left with a solid, diversified, innovative biotech powerhouse? Or is it just a whole lot of empty space where a one-hit wonder used to be? The stakes for investors who piled in during the hype, well, they're incredibly high. This isn't just a simple transition. We're talking about a total rebuild from the ground up. And you better believe every single beam and rivet is now under some serious scrutiny.
All right, so here is our 5-point structural analysis for today. This is how we're going to break it all down. We're going to start with a serious reality check on where the company stands today. Then we'll dive right into the bear case, all the reasons to be worried. After that, the bull case, the reasons for optimism. Then we will stress test their drug pipeline, which is their engine for growth. And finally, we'll deliver the Iron Financial verdict.
Okay, let's get right to it. Section 1, the reality check. The world of guaranteed government contracts and just endless global demand, that's over. It's a memory. So let's take a hard look at the new battlefield Moderna is fighting on right now.
Okay, let's dive into this. Just a quick refresher on who exactly we're dealing with here. On paper, sure, Moderna is a commercial stage biotechnology company. They're pioneers in messenger RNA or mRNA technology. But the key phrase, the part that really matters right now, is this: navigating a post-COVID-19 vaccine market. Think about that. They went from being a relatively unknown development company to a global pharmaceutical giant in what felt like the blink of an eye. Their whole world changed, and so the challenge now, the real heavy lifting, is proving that their amazing platform technology isn't just a one-trick pony. They absolutely have to transition from being the COVID vaccine company to a truly diversified firm with multiple reliable revenue streams coming in from infectious diseases, from oncology, and from rare diseases. This is the new foundation they claim to be forging. All right, Section 2, the bear case. This is where we look past the corporate buzzwords and the hype, and we inspect the cold, hard numbers. And trust me, the cracks in this foundation, they are not hard to find if you're willing to look. And the first crack we find isn't a crack at all. It's a canyon. A 40% year-over-year revenue drop. Just let that number sink in for a second. We're not talking about a slight dip here or a minor market correction. This is a revenue collapse. The primary engine of the entire company has basically been switched off, and as of right now, there is absolutely nothing in the pipeline that comes close to replacing it. This is the brutal, harsh reality of that post-pandemic world we just mentioned. This number, negative 40%, is the single biggest structural weakness we need to confront. It's a blaring signal that their main income source has all but evaporated, and it has left a massive, gaping void that they have to fill.
And you know, when your revenue falls off a cliff but your expenses don't, well, this is what you get. A staggering, almost unbelievable $2.8 billion net loss for the full year 2025. That's billions with a B of dollars, just burned, vanished. Let me frame this for you in a different way. They are losing more money in a single year than their total estimated revenue for that same year. This is not a transition. This is a 5-alarm fire raging in the engine room of the company. You have to ask, how long can any company, no matter how much cash they have, sustain this kind of cash burn before serious questions about solvency start to get asked? This isn't just a crack in the foundation. This is the sound of the entire structure groaning under immense crushing pressure.
Now, I know what a bull might argue. They'll say, hey, they're investing in the future. This is R&D spend. But what happens when those big investments hit a brick wall? And this, right here, is a massive red flag, a refusal-to-file letter from the US FDA for their seasonal flu vaccine. Let me be really clear about what that means. It means the FDA, the gatekeeper, looked at their application and said it's not even complete enough to begin a proper review. This is not a simple delay, folks. This is a fundamental, embarrassing failure in execution. This vaccine was supposed to be one of the first major non-COVID products to come to market, a key pillar of their new structure, and they stumbled right at the starting block. It casts a huge shadow of doubt over their ability to get anything through the complex regulatory process.
And you know what? It is not just us seeing these warning signs. Third-party analysis from firms like Guru Focus, they're highlighting the exact same issues. Just look at this slide. First off, a Piotrowski F-score of 3. For those of you who don't know, it's a simple 9-point scale that measures a company's financial health. It looks at profitability, leverage, operational efficiency. A low score like 3 is a major red flag that suggests the underlying business operations are poor. Then you see insider selling, 2 transactions in the last 3 months. You have to ask, why are executives cashing out their shares if the future is so bright? What do they know that we don't? And then you see the technicals. A net margin of negative 141%. That means they're spending $1.41 for every single dollar they bring in. And a 3-year revenue growth rate that's deep in the red. These aren't opinions. These are cold, hard data points, and they are screaming that the internal mechanics of this company are under severe, severe strain.
Okay, hold on a second. The cracks are real, I'll give you that. But you're completely ignoring the bedrock that this whole thing is built on. This isn't a collapse, it's a strategic rebuild. This is Section 3, the bull case. Let's look at the other side of the coin. Now, what's really fascinating about this slide is the context it provides. Yes, we just talked about how they lost $2.8 billion. That's a huge number. But they ended the year with $8.1 billion in cash and investments. To put that into perspective for you, many well-established biotech firms of a similar size operate with less than half of that. This isn't just survival money to keep the lights on. This is a war chest. This is the financial bedrock that allows them to weather the storm of falling revenue and to invest heavily in their pipeline without even blinking. This is the kind of capital that can fund major acquisitions, strategic partnerships, and the massive R&D burn that's required to build the next generation of life-saving products. A company on the verge of total collapse does not have an $8 billion fortress of cash. This is, without a doubt, their single greatest structural strength.
And while they're spending big on the future, they are showing some absolutely incredible discipline on their present operations. This chart illustrates that point brilliantly. Management is not just sitting around watching money burn. No, they took an axe to their operating expenses, cutting a massive $2.2 billion in just 1 year. You can see it right here on the chart. Total OPEX went from $7.2 billion all the way down to $5 billion. This isn't just trimming a little fat around the edges. This is a serious strategic realignment of the entire company. They actually surpassed their own cost reduction targets. This is the sign of a sharp, focused management team that understands the new reality and is making the hard, necessary choices to build a lean, efficient machine that's ready for the long haul. This is what financial fortitude looks like in action.
So here's the crucial point that I think a lot of people are missing. Despite the brutal year-over-year comparisons and the incredibly tough environment, they are executing better than Wall Street expects them to. They beat the analyst estimates for both revenue and earnings per share in the fourth quarter. The market was expecting a loss of around $2.60 per share. They came in and delivered a loss of only $2.11. In the world of finance, that is a significant beat. This shows that management has a firm, steady grip on the wheel. They're under-promising and over-delivering in a very difficult market, and that is a key sign of a well-managed company that is navigating a tough transition effectively.
And they are actively laying that new foundation brick by brick. This isn't just talk or future promises. Look at the tangible progress right here on this slide. They're signing real long-term deals for their respiratory vaccines with countries like Mexico and Taiwan. They're getting international approvals for their other products, like mNEXSpike in Canada and Australia. They're forming smart strategic commercialization collaborations, like the one they inked with Recordati for their rare disease candidate. These are the actual building blocks of future diversified non-COVID revenue. And it's exactly why they can stand there and confidently project a return to growth in 2026, forecasting up to a 10% increase in revenue. The rebuild isn't coming. It's already underway.
All right, Section 4, stress testing the pipeline. We've established that the financial foundation is solid, that cash is the fuel, but now we need to pop the hood and see if the engine can actually generate some serious power.
So let's move on and see how this all builds out. Moderna is placing its big bets on 3 core pillars, which you can see right here. First, infectious diseases, which is their home turf. They know this area well. Second, what many consider the holy grail of biotech, oncology. They're trying to use their mRNA technology to fight cancer.
And third, they're targeting highly specialized niche markets with their rare disease therapeutics. A major success in any one of these areas could be absolutely transformative for the company, but a success in oncology, well, that could change everything. And this right here is the crown jewel of the entire bull case. This is the potential blockbuster that could make all the other problems seem small. Their personalized cancer vaccine, it's called intismeran autogene, used in combination with Merck's well-known drug Keytruda, showed a 49% reduction in the risk of melanoma recurrence or death in a phase 2b trial. Let me repeat that because it's that important. They were able to nearly cut the risk of a deadly skin cancer returning in half. This is stunningly positive data. This isn't some small incremental improvement. We are talking about a potential paradigm shift in how we treat cancer. They now have 8 phase 2 and 3 trials underway for this exact treatment across multiple different cancer types. This single candidate, if it works, could be worth more than the entire company is valued at today. This is the heavy lifter in their entire pipeline.
Whoa, hold on a second. Let's pump the brakes. That oncology data is promising. I will absolutely give you that. But great data in a lab means absolutely nothing if you cannot get it across the finish line. And this slide sums up the problem in a nutshell. On the left, you've got the pipeline promise, right? The dream, like a combination vaccine for flu and COVID. Sounds great. But on the right, you have the cold, hard reality of their execution, that FDA refusal-to-file letter we already talked about. I have to ask, what good is a 49% risk reduction in a trial if you can't even assemble the paperwork correctly for a much simpler vaccine? This FDA setback raises very serious questions about their regulatory affairs team and their fundamental ability to navigate the complex approval process for every single one of these promising candidates. Promise is not profit.
But you're focusing on one single setback and you're choosing to ignore a whole series of potential near-term positive catalysts that are right around the corner. Let's look at what's actually coming up. Their norovirus vaccine phase 3 trial is now fully enrolled, with data expected in 2026. That is a huge potential market. Their propionic acidemia candidate has reached its enrollment target in its registrational study. That's another critical step towards approval. Their methylmalonic acidemia therapeutic was selected for the FDA's special START pilot program, which is specifically designed to speed up development. What I see is a pipeline that is mature and it is advancing on multiple fronts. Each one of these is a potential share price catalyst in the next 12 to 24 months. And what I see are multiple points of potential failure. A phase 3 trial can fail. It happens all the time. Reaching an enrollment target doesn't guarantee you're going to get positive data, and a special pilot program from the FDA certainly doesn't guarantee approval. Each one of these milestones that you call a catalyst, I call a binary risk event. It can go either way. That oncology data is impressive, yes, but the path from phase 2 data to a commercial product is incredibly long and it is littered with the failures of other companies. The execution risk here is simply immense.
All right, Section 5, the final verdict. We've laid out the facts on both sides of the argument. We've inspected the foundation. Now it is time to weigh all the evidence. Is Moderna a generational investment opportunity, or is it a very convincing financial trap? Okay, let's summarize the arguments side by side right here. On the structural strength side, the bull case, you have the undeniable $8.1 billion cash fortress. It's a massive advantage. You have a disciplined management team that proved they're serious by cutting $2.2 billion in operating expenses. You have the game-changing, world-altering potential of that 49% risk reduction in their oncology program. And you have a recent track record of beating analyst estimates, which shows solid execution on the financial front. But on the other side of that ledger, the visible cracks are just as clear, if not clearer. A 40% revenue collapse is not trivial. It is a crisis. A $2.8 billion annual net loss is a massive hole in the side of the ship. That FDA setback is a critical, self-inflicted execution failure that you simply cannot ignore. And the high R&D burn rate, which is projected to be around $3 billion for 2026, means that cash fortress can be drained much, much faster than the bulls think if that pipeline doesn't start delivering real wins soon.
So the crucial point really comes down to how you interpret a statement like this one from the CEO, Stefan Bancel. When I read this, I see a leader who is acknowledging the challenges head-on. He says continued challenging environment, but he is confident in his plan, pointing to their strong momentum. He's referencing the cost cuts, the pipeline advancements, the strategic deals they're making. He is laying out the blueprint for the company's rebuild. And I have to ask, what else is he going to say? Of course, the CEO is going to sound confident. That's his job. This is standard corporate talk. You could see it as strong leadership in the face of immense pressure, or you could see it as someone whistling past the graveyard. The words sound good, absolutely, but the numbers, the $2.8 billion loss, the 40% revenue decline, they tell a very different and much scarier story. The momentum he's talking about needs to translate into dollars and into approvals, and so far, it just hasn't.
So here is the final verdict from Iron Financial. Moderna is, without a doubt, a high-risk, high-reward proposition that is balanced on a knife's edge. The bear case is clear, and it is present right now. The cash burn is immense, and the execution risks are significant. Any further pipeline setbacks could easily send this stock into a tailspin. However, the bull case is equally compelling. They have the capital, that $8.1 billion war chest, to fund their vision for years. They have a management team that is demonstrating real fiscal discipline, and they have a potential paradigm-shifting asset in their oncology program that could change everything. For me, that FDA refusal-to-file is the real sticking point. It's a self-inflicted wound, and it completely undermines my confidence in their ability to execute on the rest of that promising pipeline. Until they can prove to the market that they can flawlessly navigate the regulatory process, the risk is just too high for my taste. The potential reward is massive, but the chance of stepping on a trap door feels just a little bit greater. I see that risk, but I put more weight on the capital and the underlying science. I believe the company's financial fortitude buys them the time they need to get it right. The 49% melanoma data is simply too powerful to ignore. To me, this is a bet on a proven technology platform that is backed by billions of dollars in cash. It's a calculated risk for sure, but it's one with the potential for truly explosive upside. So we're going to leave you with the final question for your own portfolio. You've seen the structural strengths and you have seen the visible cracks. Moderna has the capital and it has the blueprint. Is this a ground floor opportunity to invest in the future of medicine, or is it a trapdoor that leads to significant losses? That's for you to decide. Thank you for joining us on Iron Financial.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.